3 ways to find thousands of dollars of easy money.
Brian, I'm excited about this because everyone likes easy money, one, and two, if there are ways that we can change something about our financial life and find a few extra dollars, I think for a lot of people that can be absolutely life-changing.
Well, we know you can set your clock to the fact that about 60% of Americans can't come up with $1,000.
Yep.
And then we also can think about the fact that there's so much content out there about side hustles and working extra jobs. And sometimes you might be in the messy middle of life and you just don't have any extra time. So we want to talk about how can you find thousands of dollars without actually working harder, but just being smarter about it. You know, work smarter, not harder. And what I like about this, nothing we're going to talk about today is going to physically require you to go take another job, work extra hours. It's just a matter of fine-tuning the way you do everyday transactions to find free money.
That's right. They're not going to be super time intensive. So let's jump in with the first one. And this one I think is really exciting because this is a moment in time when that you can capitalize on right now. And it is high yield savings accounts where you hold your cash because cash is no longer trash.
Yeah, and banks, shame on banks. You know, I know that there's been a lot of drama within banking. We've had even some failures in banking because they got caught in some weird situations because the Fed has raised rates dramatically. Yep. And the thing is, though, that banks, they just don't pay us what we're due. Nope. And the fact that, and they know, let me tell you a stat that I've used in content before. The typical banking relationship is around 16 years. So because of that, it's a very sticky business. Banks have known this. So as the Fed has raised rates, unfortunately, that has not shown up in what they're paying us necessarily in your traditional banking relationships.
Yeah, if you think about this, according to the FDIC, the average savings account right now is paying 0.36%. And you may be thinking, okay, well, is that good? Is that bad? If we compare that to the federal funds rate, which is often what high yield savings accounts are tied to, it's the overnight lending rate between institutions, you can see that the federal funds rate is actually over 5% right now. So the average savings account is paying less than 0.5% when a number of high yield accounts out there are paying greater than 5%. There's a huge spread there that you could be missing out on.
See, look, back when any type of money market or online savings account was paying you less than 1%, it was hard for me to say, hey, jump through all these hoops to go change your behavior, change your banking relationship. But because it was less than 1%. Yep. I mean, it was kind of a rounding error when you apply that to your savings rate. But I want you to look at this. Now we're getting into like a 4.5% spread. We need to give you some context on what does this actually mean in cold, hard cash.
Now look, before we show you this and you get really excited and run out, recognize that there are financial institutions right now that realize they can capitalize on this. So if you are thinking about switching banks, if you are thinking about pursuing this strategy, beware of teaser rates. It's not uncommon for an institution to offer you a super shiny, attractive new rate and then 30, 60, 90 days in, drop the rate. Make sure if you're going to switch, go with a name that is perennially at the top of the list, one that you are familiar with, you've seen a lot, so you don't get sucked into a teaser rate. So the question you're probably asking is, how much am I missing out on? How much money are we talking about? Well, let's think about this. Let's assume that you have an emergency fund of $30,000, which I think doesn't seem crazy, right? $30,000 in an emergency fund sitting there. If you think about that $30,000 sitting in the average savings account earning 0.36% interest, that's $108 a year. That'll maybe take you out for a nice dinner. Contrast that to if you have a high yield savings account that's yielding 4.75%, now you're talking about over $1,400 in interest. It's a $1,300 difference for nothing, just simply changing the account that you hold your cash in.
I know we have a lot of financial mutants in the audience, and I want you to look at this. This is a wake-up call. Once again, no actual physical labor on your part. You didn't have to work any extra hours. You didn't have to go take a gig economy job. All you have to do is make sure that your cash is not being taken for granted and actually being put to work, and you can actually have a 4-figure change and more money coming in. That's $1,000 that definitely could be doing more for you in the long term.
If you're not doing this, then it probably just means that you're lazy. And I know that's unkind, but don't be lazy. Be a general that commands your army of dollars. When you go to look for a high yield savings account, if you're going to use a high yield account, make sure that it's FDIC insured, meaning it's backed by the full faith and credit of the government. Make sure the amount you're holding that account fall below the FDIC limits. It's $250,000 for individuals, $500,000 for joint households. If you can check those two boxes, you're off to the races collecting free money.
But I want to move on to the second thing you can do to find some extra money, and this one's kind of embarrassing to me. Let's talk about cut down on those subscriptions.
Yeah, it seems like, Brian, 10 years ago, we used to always talk about cutting the cord and how do we save. And streaming was this new exciting thing, and we're going to save money, and we're going to be able to customize and use these different parts and pieces. And now we are almost subscribed to death. We are dying a death of 1,000 subscriptions because there's so many things that are pulling on us month after month after month after month after month.
Yeah, we started off with cutting the cord, and if you go look in our archives, I have a special short content I did on my love for YouTube TV when it came out, because they were basically giving this thing away. I was like, cutting the cord is saving me a fortune, because I think at the time I had a satellite provider plus my internet, and you added all that together and you're like, man, this is starting to get pretty expensive. So if I could flip over to YouTube TV, that I think was well below $50 at the time, still allowed me to watch local TV, watch all my sporting, it seemed like a no-brainer. But a lot has changed in the landscape, to the point now I'm trying to figure out how I can trim the stream, because it's ridiculous. I am without a doubt paying a substantial more than I was pre-cutting the cord. We've got a problem, and I want to address it and show you some data we found as we started researching this.
Yeah, there's two problems. One, there are a number of different subscriptions that we can all consume. There are a number of different ones that we can buy. And then two, the cost of those subscriptions has been steadily increasing as this has been adopted more and more. Look at this. From 2020, from COVID, the beginning of COVID, to now, inflation as measured by the CPI is up about 17% overall. Well, if you think about some of the most common subscription services that we use, Amazon Prime, which is a super common subscription service, has just matched inflation. So I guess they haven't gotten super greedy. The price has increased, but it's matched inflation. It's not far outpaced.
Yeah, look at YouTube TV though. And by the way, when I see $49.99, that's not where I started. I even started cheaper than that, but it went from $49.99 to $72.99. That's a 46% increase, well above inflation. Disney Plus started at $6.99. You can see it's now gone up to $10.99 if you want no ads. That's a 57% price increase. And then this one, look, it's got an asterisk, but I'll explain. Netflix, with 4 users, different households, it went from $15.99 to $43.96. It's a 175% increase. Now, I read these show notes, and I was like, dang, what the heck? Wait, why the specific footnote here that said premium plan with 4 users, different households? Are people doing this? And not to sound like the old person on the content team, and he's like,
but you are,
without a doubt. So then we put on Slack, we did an internal poll of all of our employees, and I found out everybody's doing this. So Netflix has caught on, and they're actually charging for all these things, and it's got a dramatic price increase.
And so as you can see, the cost of the things that we thought were saving us money are now just getting more and more and more expensive. And so the ultimate question we have to ask whenever we consume anything, whenever we spend our hard-earned dollars is, are we actually getting value from this? So we think a great thing that you can do right now is just simply a subscription audit. Hey, are there things that I'm paying for that I don't use? If I have Amazon Prime and YouTube TV and Disney Plus and Netflix, am I actually utilizing all of those services, or am I not really using all of them as much? Or if I have different household members in different parts of the country that are on my Netflix account, is that really what makes the most sense, or should I just be paying for my account and have them go just pay for their account?
Look, let's talk about this, because let's turn this into actual dollars. The first thing, good news on the Netflix thing. Daniel did a little research for us. if you're in different households, you can actually still keep the service, but it's $8 per additional household. So that's a little bit better news than everybody having to pay the $15.99 to $17.99 to then $19.99. Everybody basically paying $20 a month. But here's the other thing I think about is that like a lot of these, since they've all insisted on going out and starting their own streaming companies, they've also created this risk now where I know people here in the firm who will remain nameless who will sign up for something for 2 to 3 months. You know, Apple comes out with Ted Lasso. They subscribe for a few months, then they drop it, and that's the risk. This flight, and I would encourage you, look at your subscription audit, because when we were doing research on this, I keep seeing all the live TV providers, whether it's YouTube TV, whether it's Hulu Live, they keep going up, up, up. And then I started thinking about my own personal lifestyle. I don't watch live TV anymore. I mean, it just seems like that is something that might be in the past, but I still like sports. So I'm going to probably have to figure out if there's some type of solution like a Sling TV or going out there and doing the ESPN Direct. There's probably some way, but I know without a doubt I am going to be able to find some type of savings that will probably add up to $60-$70 a month that I'm going to be able to implement from this.
Yeah, so if you think about that, just trimming or just getting more thoughtful in how you use your subscriptions could save, just like you said, $60 to $70 a month. That's real money. That can add up to almost $800, $900 a year, which can be super impactful over the long term.
Yeah. So, and then this third one we wanted to kind of go into. This is credit card rewards. You know, as I like to say, they're percolicious because
is that a play? It's playing Fergalicious.
Rock, you know, but because it is one of those things where, I mean, credit cards are dangerous. Don't mishear me. We hate credit card debt. Absolutely despise it. If you have any credit card, I mean, absolutely, it's a binary decision. It's either 0 or greater than 0. You don't get to use credit cards. But if you're a person that can pay your credit cards off every month, there really are some benefits, and this is the type of moment where maybe this is an easy way to get some free money.
That's exactly right. So let's talk about the benefits, and then we'll talk a little about the free money. The first is, with a credit card, as opposed to a debit card, you get better fraud protection if something happens. You know, we live in this age where cyber criminals are getting better and better and better at stealing our information. It's not a matter of when your credit card will be compromised, it's a matter of when it will be compromised. So if you are using a credit card as opposed to a debit card, you do have some additional protections in place. Instead of the thief getting your hard-earned money, they're getting the credit card's hard-earned money. It's different than if you actually see money leave your checking account, leave your savings account at your bank.
Yeah, I think federally, you're only liable up to $50 for a fraudulent transaction. But I'll be honest, I've had quite a few. Unfortunately, when you shop online, it's like you said, it's not if, it's when you'll have some type of fraud or something. I've never had a credit card company even make me pay the $50.
Yep.
It's amazing how much they protect you on that. So while you're shopping online and other things, take advantage of that protection.
And then another thing that credit cards can do for is they can help you actually build your credit. They can improve your credit. Obviously, your payment history and the types of credit and your credit utilization all go into your credit report and your credit score. Well, the better your credit is, the better it'll impact other areas of your finances, like you might have lower insurance rates. You'll obviously have lower borrowing costs. So if you can have a really healthy credit score and a healthy credit life, then it's not impossible to think that, man, I'm actually going to save dollars in other aspects of my finances as well.
Yeah, and I like to, you can't say percolicious without actually giving a little extra on that. When I'm talking about extra things, I'm talking about extending your warranty. Say, what if you could add an extra year to all of your gadgets and gizmos that you buy? I like purchase protection. It's kind of one of those things you don't have to worry, am I getting ripped off, because you know that there's some protection there. And then think about traveling. My wife and I were watching YouTube. Like I said, we're not watching live TV anymore. We're going on YouTube and doing searches on things. We were figuring out how you buy your travel tickets significantly cheaper with a point system and playing it, not necessarily opening up additional credit cards and playing that game, but just making sure you're maximizing every point. That's powerful. The lounges, the credit, the car insurance protections, there's lots of benefits that you ought to really think about that are nice perks to kind of implement.
But maybe you say, hey guys, that doesn't sound like me. I don't do all the travel. I don't want to keep up with the points. I don't understand how that works. Well, a lot of credit cards actually offer straight up up cash back rewards. If you swipe, if you use the credit card, you actually receive cash back. So it's not incredibly difficult to think. If I'm using my credit card on the things that I'm already going to spend money on anyways, and I get cash back, I'm actually buying those things for less than I would have been buying them otherwise.
So I thought it was pretty cool because we were like, let's try to figure out how much actual savings at 2%. If you were doing a cashback credit card, what would it create? But I know there's already going to be people out there who are very anti-credit card use who will say, guys, credit cards cause you to spend more money.
It's a behavioral issue.
Yeah, behaviorally, you potentially go spend more money. I was like, well, let's, for the math part of this, let's keep it to stuff. Exactly what you said. You would go spend money on anyway. And what's a good way to see what that is? Well, we know the average debit card is used for about $13,550 worth of transactions. Debit cards, I think that's probably, since it's your money, that would be a good baseline to use. Everybody who even advocates against credit card use still doesn't have an issue with debit cards. So we have $13,550. And then I said, well, what? There's other things. There's utilities. There's your property and casualty insurance on your
Car
automobile
insurance.
and other things like that. And we figured it out that utilities and car insurance average about $6,876. If you added those two things together, things you were already going to spend money on, had a 2% cashback credit card, that could generate about $409 a year of additional money coming into your household.
I want you to think about that. That's $400. You did not spend any more money than you were planning on spending anyways. You didn't go buy additional things or try to run up debt. You just, instead of swiping the one that has a D on it, you swiped the one that has a C on it. You did not change any other behaviors. And just by doing that, $400 came back to you from using credit cards.
So I want to kind of summarize these three things we've covered, because this all goes back to mindset of, if you can make small incremental decisions today that potentially could have huge impacts for that great big beautiful tomorrow. A lot of you are probably saying, well, I don't see how this is connecting. You got 2 points here. You got numbers that by themselves don't seem like life-changing. How does this all connect with this whole financial mutant status and making small incremental decisions to build tremendous wealth for the future? I'm telling you, time is your friend. If you think about this in these terms, high yield savings account. We showed you just having the average savings cash reserves for somebody who makes around $100,000 a year. You're probably going to come up with an additional $1,300
a year.
If you just do an audit of the subscriptions, because it's gotten that out of hand, we're $876 a year. If you look at credit card rewards on transactions you would spend money on anyway, $409 a year. If you add those all together, that's around $2,600 a year. So every one of you who are trying to figure out, how do I fund my first Roth IRA? How do I start this process of wealth building? It starts with these type of incremental decisions. But Bo, we left off the most exciting part of this.
That's right. This is just for 1 year. You say that $2,600. Well, if you were a financial mutant and you take that $2,600 of savings and you go invest that for your future, you say, man, what if I take this and every year I take $2,600 of savings and I invest that for 30 years, over a 30-year time frame, assuming that you could earn 8%, that $2,600 annually can turn into over $337,000. That's 1/3 of the way to millionaire status just by saving a couple $1,000 a year.
Yeah, there's no additional work, not taking on any side hustles. It was just making smarter financial decisions. And look, and if you were using this to fund your Roth accounts, that could be tax-free.
Tax-free money.
1/3 of the way to tax-free millionaire status, which by itself, there's a reason the government is limiting who can put money in those accounts. You owe it to yourself. Go ahead and start the journey. Just do something to start building that success that will put you on the path to becoming a financial mutant who will have financial independence and live life on your terms and own your time.
All it takes are these small incremental decisions. If you want to know more about how to make really great small incremental decisions, we'd encourage you to go to moneyguide.com. You can check out our resource page. You can check out our FAQs. You can check out all the archives of shows that we've done to hopefully help you take your finances to the next level.
Guys, I'm your host, Brian Preston, Mr. Bo Hansen. We do not take any of you for granted. We love that we get to create this content, whether you're at the beginning of your journey, starting to catch some traction and building success, or at that financial abundance, that abundance cycle moment where you need to take the relationship next level. We're going to be there continuing to give you the great information that will expand and accelerate your journey. I'll talk to you soon. Money Guy Team.